All right, welcome everyone. This is our webinar number 28. And thank you everyone for being part of this journey with me. So as always, we're going to talk about what's happening in market, in the traditional market, as well as in the crypto market. And then I want to dig deeper into special purpose acquisition companies. We're seeing a lot of interest. These are become one of the hot topic in investing. So I want to dig deeper into what the SPACs are, how do SPACs work, and what we as retail investors need to be aware of before we start investing in any SPAC. There are tons and tons of SPAC. And then we will also look into our option trades, trades that, a few trades that we done this week and how the previous trades have been performing. Before we start, I think a quick disclaimer, this is not a financial, investment, tax, or any type of advice. We are all here to learn from each other. So don't trade based on what you hear in this session. Use your own discretion. Talk to any consultant that you may have. There were lots of ups and downs in the market, but eventually at the end of the week, it's largely unchanged. SPY close to 0.5% down. Dow Jones, 0.33%. So I don't see big changes. Even tech sector, which generally is very volatile. Last week it was up 3.28%. This week, 0.75% down. In IWM, that also fell, down this week. But again, all within very contained limit. But the VIX was a standout. VIX actually jumped more than 6%. So of whatever happened in the market last 2 days, Fastly and all the tech stocks, at the end of a week, if you look from week to week perspective, it's a nothing burger, right? Not much change last week. So last Friday, 16th was the monthly expiration for October. So I hope you were able to exit all your positions by Friday. If not, and if you're still holding any open option trades, anything which is out of money, those will expire, and anything which was in the money will be either assigned. Let's quickly look at a year-to-date performance of all the indices. Again, tech is still the top. This might be a little eye chart, so let me zoom into it further. Okay, this might be a little better. Tech is still up almost 33% for this year. And this is year-to-date chart. And surprisingly, the other two are, the pensioners stock or widowers stock. The things that move slowly. Gold, bonds. Gold has returned almost 24%. Bonds have returned almost 18% this year. Then comes SPY. It's good to see SPY back into action, up almost 7%. And Dow Jones Index is barely up for the year. Despite all what we have seen in the past few weeks, it is just broken even. And IWM, small and medium businesses, they still have to catch up. No surprises there. A lot of small businesses are in trouble, and it will still take time for them to recover. Generally, we have seen IWM being a harbinger of what might happen to overall economy or to the largest stocks, but stock market is different. IWM is still reeling from the impact of coronavirus, whereas a lot of other ETFs, they have already recovered. And some, like growth, like tech, they're blown through the roof. Sector-wise S&P, a quick look at the S&P sector-wise. Again, no surprises there that the tech and the consumer discretionary are the top performing sectors. The tech XLK is up 32%, consumer discretionary is up 23%. The worst performing sectors, week over week, and there has been no change in this, is energy. That's the worst performer, and followed by financial by a wide margin. And again, no change in narrative from what was previous week. So this situation continue to be there. Financials are bogged down by low interest rate, bad performing loans. They have exposure to a lot of industries which are going down. So those banks have not recovered. Energy, I don't think we need to talk about it. Everyone knows the issue with the energy is a glut in the oil, and the supply of energy, the supply of oil far outstrip the demand that we have for oil. So a lot of stress in oil and energy sector still. Economy has to come back for for us to see any recovery in energy sector. By the way, I am still long in financials. My position is continue to play options in financials. I've shared some of them already as a part of our this weekly meeting, and I continue to stay long on financials. This will recover. It'll take time. It's not today is not financials day, but eventually some of those big banks, they're not going to go anywhere. So that's what I'm hopeful on financials. Let's jump into SPAC. Let's start our discussion on talking about SPACs today, and then we will get back onto crypto world. So let me bring up my SPAC presentation, and we will get going. Venus says interesting stuff with Fastly, Neo, Jumia, which kept us high. Yeah, definitely kept me high. I have positions in Neo and Jumia for quite some time, and I've seen many seasons with both of these companies. Neo right from $4 all the way to $10, all the way to $2, back to $16, back to $10, $11, and now it is $20, $26. So and Jumia is like $40, and then it fell down, and now it's back to $15. So yeah, Fastly, on the other hand, I think it was my opinion around Fastly was it is an overreaction. Not to say that Fastly wasn't overpriced. I mean, 40 times sales means you have to have impeccable growth story. You have to have better than impeccable growth story if your stock is trading at 40 times sales. Only thing that was why investors were paying so much premium is because of growth. And when Fastly management came and told that some of the biggest customers may not have used their services as much as they thought they would, market sell off. And it's anybody's guess who would be selling at so much of a Fastly. It could have been that people have built up some long call positions, wanted to get out before they become worthless, and they might have started to sell their call positions, or people might have had gains in Fastly and they were thinking, okay, you know what, I'll probably come back later, I want to capture my gains. We don't know, but still falling 35%, and now I think it is more on the guidance, which was what, a couple of millions down. They reduced their quarterly guidance from the range of 73 to 76 million. They reduced it to 71 to some 73, 74 million. So it wasn't a big miss, but nonetheless, it's a miss. It's a crack in their growth story, and that spooked some of the Fastly investors. And yeah, I think that's what. So I'm still long on Fastly. Again, when I say long means I'm looking at my 5-10 year horizon, and then I'll use options to play my long story. Will this be a great company and continue to, will this grow and go higher from where it is in 5 years, 10 years? Oh, yes, I feel so. So that's why I will stay long. Uh, is election result already uh, in the market mean Biden to win? No one can predict whether Biden will win, but one thing is very clear in the markets. Looks like market just don't care who's going to win. We earlier heard story of that if Biden would win, market would sell off because of increase in the capital gain tax and some of the policies which generally on the Democrat side there's a why the rich should make so much money. So there were a lot of speculations around if Biden wins, it will not be good for market. There will be more regulations, the capital gains tax would increase, and then market will suddenly find another narrative. Now they're saying, if it's a blue wave, oh, we'll have a good time for renewable energy, and then it will have a stimulus might come up, and then it may not be as bad as we thought earlier. So I don't pay too much attention on whether it would be Republican or Democrat, etc. And then now I feel, either way, market is already priced out. They found the comfort spot of whoever wins really doesn't matter. I mean, that's again my opinion. I'm not building my positions thinking what if Biden wins or what if Donald Trump gets reelected. Steve says, I sold a bear call spread on Fastly, so I'm happy. That worked out for you, Steve. Any take, will it go up or down after? So what's the reason Fastly has to give us info before earnings? Can they wait till earnings, till October 28th? I don't know in terms of, for example, in SEC regulations, if it is a material information, what's the timeline that you have to disclose? You may not always have to wait for the earnings. So if they've found out something which is material, and then they might have thought that's why we need to disclose it. Something could be, a health of a CEO or anything like that. So any take, will it go up or down after earnings? Man, if I was able to predict that, I would be sitting in my own island. I have no predictions on whether it will go up or down. My especially after earnings, my own personal take is it's been beaten too much. But again, it was priced for growth. So when any stock is priced so heavily and based on the growth expectations, those stocks will tend to stay volatile. So if you are in Fastly, be ready for a roller coaster ride. It is not going to be a smooth sailing anyway. Cool. All right, let's jump on to SPAC. Okay, so today we're gonna dig deeper into SPAC, special purpose acquisition companies or corporations. All right, so quick background on why we are talking about SPACs today. So first, let's understand how companies arrive on public market, right? Where one process that we all are very familiar with is traditional IPO process, like Snowflake, fresh on our minds. In this traditional IPO process, the company's management, they work with underwriters. They find underwriters, Goldman Sachs, JP Morgan, those investment bankers who are paid big bucks to understand company and then to underwrite that company. And then they also have to find investors, try to figure out what's the investor appetite for their company. The company executives, they will go with their underwriters, they will go on the roadshow, meet a lot of institutional investors for a week, for 10 days, trying to tell them what this company is about and what it could be worth. And then those investment bankers, they will try to figure out what's the interest among those institutional investors about the company, at what price point they may be willing to buy. So through all those discussions and negotiations, underwriters arrive at a price point. So with the Snowflake, it started at $70, $80, $90. And then when Warren Buffett jumped in, Salesforce jumped in, underwriters figured out, oh, there is a lot more interest than what we had earlier thought. Let's increase our price. Eventually, they increased it to $120, right? And in this IPO process, it's the underwriters, it's the bankers, they buy the shares from the company. Then they work and take it through the listing process with the exchanges. Okay. So when Snowflake had IPO'd at 120, means the company actually got $120, but when it opened in the market, it opened at $240. People say, oh, it's a great IPO because it jumped 100%. It was IPO'd at 120, it opened at 240. It's a fantastic IPO. I have a different opinion. I think it was a failure of an IPO from company perspective. It was a great IPO for underwriters because they got the shares at 120. A company missed out on the lot of money that they could have raised. Snowflake as a company only got $120. So they could have gotten double the amount of money if underwriters would have been able to figure out what the actual demand could be once it is listed. So from my perspective, I look at most of the money should have gone to Snowflake. So they would have been able to invest in their business and grow the business like hell. Instead, big chunk of money went to the bankers. So when you say it's a success, it's a great IPO, just think from which perspective are we talking through. From a perspective of bankers, it's a great IPO. From a perspective of initial investors who were now able to sell in the market, great IPO. From perspective of Snowflake as a company, not that great. And I'm sure, the CFO of Snowflake would have been talking to whoever was the underwriter company. What the heck? We left so much money on the table. Anyway, so that's one process, and that's one big flaw which a lot of companies are saying is this process is broken. We as a company are leaving a lot of money on the table. And instead, these bankers, the intermediaries, they are becoming richer. All that money, Snowflake company should have gotten $240 per share that they sold. Instead, bankers bought the share at 120, and then whereas the market is ready to pay $240 for the shares. So this is a negative sentiment I'd see around the traditional IPO, making the rounds, the process is broken. So the second option is direct listing. Spotify, Slack. Spotify was the first one, then Slack, and this year, a couple of other companies, Asana, Palantir, they all went through the direct listing. Means you don't have those underwriters to find out or to buy the shares from you. They don't do the roadshows. Instead, it's an investor where they'll tell what the company is about. And those shares get directly listed on exchange. So there is no underwriter or no bank to back up those shares. And don't get me wrong, underwriters, they do play a role in this market. The role of underwriters is to make sure the shares don't become too volatile, say if the shares is falling down, right? So generally, when you go through traditional IPO, say Snowflake got listed at IPO'd at 120. What if instead of it being a cloud computing, it was a cruise company? Right? No one wants to buy a cruise company. People would short it, right? They will bring down the price of Snowflake, the cruise company. In those cases, underwriters play a role that they can buy additional shares from market. They have an option to buy additional shares at the IPO price. So they'll try to stabilize and make sure that the price don't, fall down too much. So if you're going direct listing, there is no underwriter. It's out there in public market. The the market will determine what the right price would be. But there has to be some opening price. So exchange find out based at what price point they would open, and they look at the last few months or few days of the valuation of your company, and based on that they define using a set formula saying this is when we will open it up for on the IPO. In this cases, many of the cases company just don't raise any money. It is just that they want to list their shares on the market for some employees or early investors to have a liquidity event. One other thing is on traditional IPO process, there is a lock-in period of 180 days. On direct listing, there is no lock-in period for employees. There is no lockup period. So the traditional 180 days of lockup period does not apply to direct listing process. So these are the two main processes that we were familiar with on how companies come onto IPO. The third one is, okay, forget about both. Let's move on to the dark side. And that is what is SPAC. In 2020, we saw renewed interest, and SPAC is not anything new, just that there was not much happening on the SPAC. But in 2020, we saw a spectacular increase in IPOs of SPAC. So till now, 54 billion have been raised in SPAC IPOs. It's already 4 times the amount raised in 2019. And the stats are till end of September. So we still got one more quarter to go. This is the total amount of money that have been raised on SPACs. In 2020, it's already 54 billion. Like I said, this is nothing new. SPACs have been there for quite some time. If you look at this last decade of stats, 2009, one SPAC IPO. 2019, 59. 2020, by end of September, it's already 139. Too much interest in SPAC. And that's the reason, even we are talking about SPAC. So what is SPAC? It is an acronym for Special Purpose Acquisition Company. It's a shell company. It doesn't have any products. It have no services to sell, no products to sell, no plants, no machinery, no land, nothing. It's a paper company. It's a shell company that has been created just for one purpose. And the purpose is to raise money to acquire another company. That's the sole purpose of any SPAC. So they do an IPO to raise money, and then they have that money, and the purpose is I will go and acquire other company. So type of SPACs, there are general purpose SPAC in which when the SPAC goes IPO, and again, the SPAC has to go through that, traditional S1 filing, etc. So if you're interested in to know what the SPAC would be investing in, go and read that S1. They will specify in their S1 that have they already, is it a general purpose? Means I don't know what I may want to acquire. Whatever opportunity we think in whichever sector, we will look into that. Or it could be a specific type. We would acquire or look for acquisition in gaming industry. That's a specific SPAC. We will look for investment in travel industry. Again, specific SPAC, right? So they may not specify which company because they don't know what opportunity they may find, but they want to be focused on a particular industry. So these are generally, the type of SPAC that you may see. One is general purpose, the other one are very specific ones. Okay. Typically, SPAC has got close to 2 years from the time they raise money to find a company to acquire. Because that acquisition time is when it's a liquidity event for the investors in SPAC. So they do the IPO, SPAC, and SPAC IPO is easy because there are no, previous financial reports. There are no products to talk about. There is no specific competitors to talk about. There is no, operations to discuss. It's only thing that is why the IPO for SPAC, it take around 2 months. A company going an IPO is a year-long process, or sometimes more. A SPAC going IPO in 2 months, if I'm a well-known expert in a particular industry, and then we see that there's a lot of craze about SPAC, and I know that people would have faith in me and would invest if they know that I'm in the market to raise money. Good time for me to create a SPAC. And I was just listening to a funny news is again, some of those executives, those who had built companies, sold companies, and were now doing and enjoying life, by buying baseball teams or being owner of basketball teams. And I was reading about one such executive is, he was saying many of his friends came and told him, why don't you, form a SPAC? And then that guy was like, what the heck is it? What is this SPAC? And then he did some quick reading for a week. Like, okay, I can do it. And within a week, there was a SPAC. He created a SPAC and he raised some money. So creation of a SPAC is easy. It takes, going through IPO around 8 weeks. And then comes I would say the tough part is you have to identify which company you want to acquire. And then which takes maybe around 19 months, close 18, 19 months. And then you close the whole acquisition. So generally this is like almost 2.5 year long process. So if you are investing in SPAC, consider it as your CD for next 2 years. It's a 2-year duration CD, though you can't break it. Okay. Now, there was a question, when are you creating SPAC, Vivek? All right. Sometime. Those times will come, not now. But I think by that time, SPAC will not be in fashion anymore. It's like a fashion. I mean, it was there. Today it is in fashion. Who knows where SPAC will go? So from a company, like I said, the whole purpose of SPAC is to acquire another company. So that brings up a question. Why would the other company would go through SPAC and not go through either the traditional IPO to raise money or through the direct listing? Why would they agree to be acquired by a SPAC? One reason is IPO process is cumbersome. My I've been in a company where we had an IPO, and we have seen it. It takes minimum from within a company, because now what we see is when a company have filed confidentially for S1 and then, but the prep actually starts long back, much prior to that, and it takes more than a year for a company to start preparing for IPO. It's a cumbersome process. Your execs, a lot of the attention, time of the executive is spent in preparing the company for IPO. Suddenly you will see the whole C-suite rooms are vacant because all of them are on roadshow. They're gone for a week. They're gone for 10 days. They're all on roadshow. CFOs, CEOs are meeting, every week they're meeting investors and then trying to explain about the company, etc., etc. It takes time. So and it is expensive. Now, in last 2 months, ever since I started reading about these SPACs, or probably 3 months, I've changed my viewpoint on this expensive. So earlier I thought that the going through the SPAC route is cheaper for a company to get money that they need for growth. I don't think so anymore. All that is why I put it in quotes is it actually could also, it could be more expensive, and we will talk about it, how it could be. It depends on how the SPAC terms are. So it is not always cheap. The upfront cost may be, but there are inherent costs that it might make it more expensive to raise money through SPAC route than through traditional IPO route. But it's much quicker. It is much easier, right? So if you go to traditional IPO, like we talked about, you have to convince a lot of institutional investors, right? And not just one, 10, 15, 20, 50. All the investors that you meet from morning till evening for whole full 1 week on a road show is like, it's not an easy task. It's like, the management is trying to sell the company. It's like a hardcore sales job that you have to knock on every door of institutional investors and sell your company to them, convince them to invest in your company. The price that you're looking for keeps on changing, right? We talked about Snowflake. It was it was good that the price was increasing. We have also seen other companies where the price kept decreasing. I think I forgot, probably Palantir or some other company where they had to reduce the price because the investors were not willing to pay the price that the company was looking for or the underwriters were hoping for. Other is why some companies go through the SPAC is you get more cash upfront. And you have little certainty about how much amount of money you're going to be able to raise. In SPAC, you have to convince only one investor. If I'm a company, I'm a small company, and I need money for growth. Traditional IPO, I have to convince 50 investors, work with bankers to convince them. In SPAC, I need to convince only the SPAC management that I'm talking to. And we get a lot of money. It's not just a SPAC money. There's another concept, PIPE, we'll talk about it, which is additional money I can raise. Second is, and this is again, I think most of the SPACs are like this. These are the specific purpose SPAC. What I talked about is the incentives of the SPAC sponsors and the companies are aligned because many of the SPAC sponsors, they get paid as an equity stake in the company. Number two, most of the SPAC sponsors are actually seasoned executives in those industry. In a traditional IPO, I have to convince the investors as Fidelity institutional investors, at Vanguard, at BlackRock, at some hedge fund, who have no idea about what my company does, who have no idea about what we do at OptionGig. So I have to convince them, I have to tell them what my business is, I have to explain it to them what we do. And but in case of a SPAC, probably I'll reach out to a SPAC whose sponsor has been an ex option guy, or has been an ex investor education guy, because then it's much easier for me to explain it to them. And not only I'll get money as an acquired company, I also get its expertise. We benefit from the network that it's like a venture capital help you get from those expertise in a public market. But one thing you have to be sure of, the sponsors of SPAC becomes your bedtime partners. In many cases, they actually become the chairman of the company. So make sure as a company executive from acquired company, if I want to raise money through SPAC, I am okay to live with a SPAC sponsor. A quick look from an investor perspective. If I'm investing in SPAC, it's like a share with put option for free. And we look at the reason. Reason is most of the SPACs, they come out at $10 price, and those will be redeemable at $10 at the end of 2 years if SPAC is not able to find any good company that they want to acquire. So generally the period mentioned in S1 is 2 years. It could be extended, but generally it is 2 years. So if I invest in SPAC, so I'm a SPAC investor, I'm investing in SPAC. My perspective is, why would I want to invest? I invest $10 in 2 years. If I don't like, or if the company doesn't find, the SPAC doesn't find a company to acquire, I can redeem back those shares at $10. Right? So I got a put option, and for free means I don't have to, I have a guarantee that I'll get back my $10. Or even if a company, if the SPAC is able to acquire a company and I don't like what the company that they're acquiring, I can redeem my SPAC shares. So, I have an option saying I invest in $10, I can get back my $10. But if you like the company that is being acquired, then I get into it earlier than anyone else. So that's a perspective of investor. Now, mind you, that the redemption of a SPAC shares happens at the par value. So most of the SPAC shares, when they raise money, they raise it at $10. There are exceptions, but most of them have a base price of $10, and it will be redeemed at $10. So if you are buying a SPAC shares from market and the SPAC is now trading at $14, don't think that you will get, your shares would be redeemed at $14. That won't happen. The redemption value is still $10. Okay. So let's look at some of the SPACs that have been in news. In the recent times, this was a IPOA, Social Capital. Sponsor is Social Capital. SPAC is Heather Sophia Holdings. Number one, IPOA, they raised $600 million and they merged with, or they acquired Virgin Galactic. Now the process happens is, if a SPAC finds a company and they acquire the company, then the ticker of the acquired company starts to list on the markets. So if you look into SPCE, for 2017, this ticker was IPOA. and it traded around what, $9.96, around $10, right? It traded at its listed when the money was raised, and then it fell down. And I think maybe around here is when it would have acquired Virgin Galactic, and then the IPOA ticker changed to SPCE. And then, it becomes Virgin Galactic. Same is the case with NKLA, Nikola Motors. This year, why the SPAC became hot is because of Nikola. At least I got to get into SPAC. I started looking at SPAC because of Nikola, because I saw suddenly there's a company called Nikola Motors and it is rising. How come I never heard about this ticker before? Why this was not on my radar? And then I realized that it didn't exist before March. Before March, it was trading under its SPAC name. The merger happened somewhere over here. And then when this merger happens, the SPAC basically takes over the ticker for the company. So then it starts to trade under ticker NKLA. This is how the workings of the SPAC is. Again, the other acquisition was Diamond Eagle acquisition. That's another SPAC. They raised $400 million. They took DraftKings to IPO. They brought DraftKings into public markets. Vecto IQ, we just talked about it. It was Vecto IQ, and then they acquired Nikola Motors, and suddenly Nikola Motors is on radar for all the investors. Now the more recent ones, Heather Sophia Holdings 2, IPO B, $360 million. They have agreed to acquire Opendoor. The acquisition has not been completed yet. So right now it is still trading as IPO B. But see, it was around $10 or whatever, $11. They announced that they're gonna acquire Opendoor. They're working through that merger process. Remember, we saw that even after announcement, it could be another 2 weeks before they finish the merger process. And when this acquisition process is completed, when this activity is consummated, IPO B will become, I don't know, what's the ticker of Opendoor, whatever, OPDR or whatever the ticker is. So right now it is IPO B. Heather Sophia Holdings 3, IPO C, $720 million. Clover Health, they've already found out the company that they want to merge with. They want to bring it to public. It's called Clover Health. So IPO C, again, right now it is, I think this acquisition has not been completed yet. Yes, so that's why you still see IPO C trading. Whenever that acquisition is completed, it will become Clover Health. Okay, so these are some of the recent ones that have gone in. And the sponsor behind all these IPO A, B, C is Social Capital, run by Chamath Palihapitiya. He was an ex-VP of growth at Facebook, made his money on Facebook, and now he's a tech investor, a big time investor in Silicon Valley. So he has got some good record to show in terms of SPAC. And his target is to make this from A to Z. So I think they already have IPO D, IPO E, IPO F. And one of them is more than $1 billion. So there are already 3 SPACs that Chamath has raised. Maybe we can look into it. But they are waiting for some good opportunity to find a company that they want to take public. Social Capital. Let's look at. Oh, their file is full. I think even they have this is little old. This is a month later. I think they have till F or something like No, this is 5th. The 5th was done in October 9. No, there is one more after that. So Chamath has been very active in this space. Any of you have invested in any of the SPACs earlier? Anything to share on your own experience with SPACs? Looks like no. All right, so when SPAC, goes IPO, what's listed on the exchange? And this is very interesting, and it is important for us as investors to understand. Otherwise, we will get the surprise which most of the retail investors got during Nicola. So what they list are units. Units has got a share and some warrants. And those warrants could be 1/9 of a warrant, or 1/4 of a warrant, or 1/3 of a warrant. You have to read the prospectus S1 to find out what that warrant is. So let's take a quick look at things that have not been consummated yet. IPOC. Okay, so IPOC, we already have F. So IPOF. So in IPOF, you see this is IPOF by itself. Come on, load it. Or it refuses to load it. So let's try something else. Okay, this is another one, a SPAC. In this case, you can see it has got a PSTH. It has got units, which is PSTH/U. It has got PSTH, PSTH/WS. So when a SPAC gets listed on exchange, it's got a units, which has got PSTH/U. It has got one share of PSTH and a portion of a warrant. Share has got one share. PSTH has got one PSTH share underneath it. Warrants, PSTH/WS, those are the warrants. No surprise there. Those warrants can be converted to stock at a predefined price. So generally, this is like a call option. So generally, most of the SPAC IPOs will have that the warrant can be converted into stock at once the stock price is, at the strike price of 11.5, because SPAC IPO is at base price is at $10. That warrant can be converted at a strike price of $11.50 at a particular time. So they have some conditions. So make sure you go through before you invest in any of these, either units, shares, or warrants. You understand how does these warrants work? When would you be able to convert your warrants into the shares? There is a price. There is also a limit on what time before which you cannot. So go through that. So, but if the shares don't hit that 50% highest price, that warrant could go to zero. So this is like a call option. So if you just want to buy, instead of buying PSTH, you want to buy warrant, make sure you understand, when would you be able to redeem this warrant? What's the base price of stock need to be, for the redemption? And if the share doesn't hit that price, or this become worthless. This is like a call option. So I think when the SPAC comes IPO, it's a unit, and then probably they split into share and warrant separately. Oh, we already took this example. PSTH, PSTHU has got 1 share and 1/9 of a warrant. So it means if I were to invest in PSTH/U, I would want to pick it up in the multiples of 9, so that, let's say, the warrant exercise date may be 30 days after the merger is completed, and I want to exercise my warrant, want to convert my warrant into shares. I know that the 1 is equal to 1/9 of a share, so I need to have the multiples of 9, otherwise I will get the rest in cash. So understand that, in terms of what's the warrant, the fraction of a shares that of the fraction of the warrant that is available in the unit. Yeah, at some point of a time, unit will split into shares and warrants, and then you will see these two also started to list. Each whole redeemable warrant entitles holder. Oh, we talked about it. Okay. So in case of Persian Square, it is not $11.50. It is $23, because the Persian Square actually started at $20. It's not $10. So the general criteria is 15% higher than the base price. So if it is $10 is the base price, then it will be $11.50 is the price at which the warrant will entitle the holder to convert it for a share. So if I'm holding 1 unit and the PSTH is above, at 23, and the time has already arrived where I can convert, I'll have 1 share and 1/9 of a share. And if I want to convert the warrant, I will get 1/9 of a share, which I can't, so I'll just get the cash. But if I want shares, I want to make sure I buy it in multiples of 9. Oh, Serum Mesh saying, can you please show us S1 of any SPAC? Okay, let's bring it up. PTH S1 document. Go to Edgar. There we go. All right, so it mentions each unit consisting of 1 share and 1/9 of a redeemable warrant. Now, most of them, SPACs, will have the offering price as $10. Persian Square is from Bill Ackman. He wants to do things differently. He plays big, right? He's a big hedge fund guy. So he offered the price at $20 instead of $10, right? And there will be some warrant conditions mentioned. Okay, let's read through here. So it says this is an initial public offering for our securities. Each unit is $20 and 1/9 of 1 redeemable warrant. Okay. And then that says that we expect that the units will separate on 52nd day following the date of this prospectus. So coming back here. When PSTH went IPO, it was only PSTH/U. 52nd day, after, on 53rd day, it's split and you have PSTH and PSTH warrants. So let's look at here. So we have PSTH warrants. Let's look at what happened to PSTH/U. It didn't trade after whatever, September 10th, because it split into shares and warrants. So this was when it was initially listed at around $20, went up all the way. 52nd day, after 50, on 53rd day, it's split into shares and warrants, and then the unit stopped trading. Okay, each redeemable warrant will entitle the holder to purchase 1 share. Oh, this might be an eye chart for you. Okay, this could be better. So let's look at this as, yeah, so there he talks about warrants. It entitles a holder to purchase one share at a price of 23 per share. So this is like a call option with a strike price of 23. Now the redeemable warrant will become exercisable, and this is a condition on when you can exercise your warrants. On the later of 30 days after the completion of initial business combination, or 12 months from the closing of this offer. So you have, once the SPAC decide to buy a business, 30 days after that, or 12 months from the closing of this offering, whichever is later. And you have this call option, long-term call option for 5 years. So these are the things you need to be aware of when you're going through it, is when will that warrant expire and how long it is available for, when do we have to make a decision, etc. Oh, it was right over there. Okay, that's what I picked up from S1. So anyway, we saw this in S1 already. So now let's come to how we build our investing thesis of investing in SPACs. So the question, so why should we or why should not we? So so before investing, make sure you trust the sponsor and the management of SPAC. There is nothing else in it. There are no products. There are no services. There are no books. There are no financial statements. There are no revenue numbers. There are no research reports. Only thing in SPAC is it Bill Ackman or is it Vivek Somani? So you trust whom you want to trust and put your money behind that person. That's the only investing thesis. Nothing much on SPAC. What's their track record? Are they doing it for the first time? Have they done and taken and identified some companies and have brought them to public, and then those companies have done really good? Chamath, he got some track record with Virgin Galactic. No wonder he's been raising money. I started with IPO A, now he's got what? IPO F. So how much personal money have they put in? Has Chamath committed money from social capital into these IPOs? I don't know. I haven't studied. I know that for Persian Capital, the SPAC is of $3 billion. And then Bill Ackman has already committed that he will bring in additional $1 million from his Persian Square hedge fund. So he is putting his hedge fund money behind it. This is, when we generally review the stocks, this is the section where I bring in skin in the game. Does the management have skin in the game? Or is it all outsiders' money that they want to play with? So when you're looking into a SPAC, might want to see it. Or this one caught my attention because of just one SPAC that I came across it. Is it just financial engineering or is it a real business acquisition? So as always, whenever any trend becomes really hot, any any new trend that causes that catches investors or fancy, you will see a lot of players who are trying to take advantage of that that model. So I came across one SPAC in which the owner of the SPAC and the company that the SPAC is acquiring is the same. Is a one person who owns the SPAC, is a sponsor of a SPAC, and the same person owns the company that the SPAC is trying to acquire. I'm like, what the hell? I would rather stay away from that. This is no real business acquisition. You already own that company. You are trying to do, then I won't have any faith in terms of what's the due diligence the SPAC has done on that acquiring company. Right? So stay away. I mean, I would not say stay away. I would say, make sure you check those SPACs really well. Other thing to look at, how many units are allocated in founders pot? So founders means the sponsors of SPAC. So when the SPAC brings a company onto IPO, generally they get 20% of the company. That's a general criteria I'm seeing in almost all the SPACs. So that's, as a founder, they get a nice kitty. So look, in if in some of the SPACs it is less, it means they're leaving a lot of money for the investors, and not founders are cornering the initial bounty. So look at some of these things before you invest in SPAC. How many warrants are included? We talked about is 1/3, 1/9, 1/4. When do the warrants expire or redeemable by company? In some SPAC, I even saw that company could call the warrants back. We would forcefully maybe ask to redeem the warrants. So you got to read through it. How many warrants are issued to PIPE investors? And this is what caught Nicola, investors like you and I by surprise. I didn't know about these PIPE investors at all. And somewhere, Nicola Motors suddenly fell down and everyone was, what the heck has happened to Nicola? And the reason was, there were a lot of PIPE investors, which is called private investment in public entities. So let's talk about where this PIPE comes into picture. So we talked about that the SPAC have raised money, $600 million. Now, the open door, or let's not even talk about open door because I don't know what the real numbers on open door is. Okay, say a SPAC have $500 million, and I have a company, OG Biopharma. We talk about that company, great company, everyone should invest in. Okay, I'm kidding. So the SPAC reach out to me and say, hey, we want to buy your OG Pharma. I'm like, it's 10 billion worth. SPAC says, okay, we want to buy, 20% of your company. Fine. That means $2 billion. SPAC has got only $500 million. That's where the founders or the sponsors of SPAC will reach out to their friends and families, other institutional investors, hedge funds, to raise $1.5 billion. Those are called PIPE investors. Those are private investors who are now investing into the SPAC, which is already a public company. SPAC has already been IPO. And those PIPE investors, they get warrants. And that's what happened in Nicola. Vecto IQ had only $200 million. And at whatever money that they had to spend on Nicola, they raised it through the PIPE investors. Those PIPE investors got warrant. There are conditions on when those warrants are redeemable. When the date came along, all those PIPE investors, they converted their warrant into shares. Boom. Market is flooded with Nicola shares. Share price fell down 26%, or I think it was maybe 40%. So if we had known on Nicola and Vecto IQ, we would have figured out that the warrants are about to be redeemed, get out, or be aware that you're going to go through this ride. So, and most of the SPACs will have PIPE investors. So do your homework. This is not, this is a high risk, high reward game. So any questions? I need to sip some water. Now we will review some of the SPACs and we'll open for Q&A. I see Sachin says in Vivek we trust. Oh, thank you. Now it gives him more confidence to open up a SPAC. I have one investor at least. Ramesh says, I rather trade options and buy the stocks of reputable companies. So that's always been a choice. This is a new investment vehicle. And so we want to dig deeper. Only thing I want to make, educate is don't invest blindly. This has become another hot commodity in 2020, as we have seen, the number shows. So be aware of what the gotchas could be, what are the things that you need to look into before you invest. And you might find something which could be, quickly become, let's say, 5-bagger, 6-bagger. Right? We cannot get into the pre-IPO price as a retail investor. We can't. So by the time company comes to IPO, what happened in Snowflake? It's already double. But by investing in SPAC, and if we have done our homework, we are getting into a company kind of a pre-IPO. So let's look at some of the SPACs that I spent some time and see if any one of these fancy you. Some of the SPACs pre-merger means they haven't yet identified any companies. And then we will look at some of the SPACs, those who have already identified the companies that they want to merge with, but the merger has not happened yet. ECNP, Executive Network Partnering Corporation. As the name suggests, it is all about networking. $300 million they raised in IPO. Sponsor is Paul Ryan, former House Speaker and former Vice President candidate. This is a SPAC which is a powerhouse. It's a politically connected SPAC. Financial sponsor behind is SPAC is Mitt Romney's son. So any company contracting or selling to government, this SPAC would be useful. So if you now Palantir is already public, so we can't look at that. But if you have any, if you are interested in the companies that work mostly on government contracts, still is a private company, and you think that they may be looking for an IPO, maybe you want to follow ENPC and see if they are the one, there's a match. Or if your experience shows that some of those companies have grown, then over once they become IPO, maybe then get in ENPC. They will probably find some company, and with the type of backers, they may have some better success in working with government contracts. Persian Square. This is the one which probably again, educational opinion only, but I might get into it. This is a $4 billion with additional commitment up to $3 billion from Bill Ackman. Bill Ackman has some experience in SPAC. So long back, he used a SPAC to effect the merger of Burger King and restaurant brand. Bill Ackman is also a well-known investor, hedge fund manager. He has had his own glory days and gloomy days. Herbalife, didn't work out. Chipotle, great success story. So if you have faith on Bill Ackman, you think he can pull off a merger with some really big company, you may want to look at PSTH. So what Bill mentioned, he's looking for a mature unicorn. Don't want to invest in companies like Nikola who have no products. And he wants to take a minority stake, 20% or 30%. Unicorn which is mature. Could it be Robinhood, Airbnb, Stripe, Chime, Coinbase, SpaceX? All these are on, I'm sure all these are on Bill Ackman's radar. What I also read about is that Airbnb, he probably approached Airbnb and Stripe, and both of them have told, no, we don't want to go through a merger route with SPAC to raise money. Maybe those Airbnb wants to go through traditional IPO route. So check if, you have faith on Bill Ackman, and you think he will be able to bring any of these or some other mature unicorn onto public market. And remember a few sessions earlier, someone asked, how do we get into a company pre-IPO? This is one another route. Maybe buy PSTH and then let Bill Ackman do his homework. Because his SPAC is so big, he needs to look at a company that is a $20 to $40 billion valuation. He's not after the smaller companies. Secondly, and this is what I like the provision, which probably tilt PSTH more favorably towards me, is the Taunting Provision. I mean, he picked up the name because of this provision. It means if I want to redeem my warrants earlier, etc. So I've not known the exact data, but the way it is, this whole provision makes it attractive for the warrant holders who hold their warrant for a long time. So for example, when the merger is happening and I don't like the company, I want to redeem my shares, I can redeem my PSTH shares at $20, but then the warrants, the PSTH share and warrants, the warrants in that will get distributed to the ones who have not redeemed it. Something like that. So if you're holding PSTH for longer, if some of the investors go out, you are benefited. So what Bill Ackman is doing to make it more attractive is providing more incentive for long-term holders. And he is also not taking the 20% cut that generally we have seen in the SPAC sponsors are getting it. So Bill's point is, if I can get 20 to 30% of a mature unicorn, and my hedge fund is already invested in it, I think that's all I want. So he's not taking it to 20%, the initial founder one, so that he can bring in more and more, make this PSTS more attractive for investors. Okay. But again, these are all pre-merger. We don't know what he's going to buy. It could buy Robinhood or it could buy OG Pharma. That all depends on what Bill wants to do. Go Acquisition Corp is the next SPAC. Objective is to acquire a company in a travel or related businesses. So currently this is in a distressed sector, so they may not be able to find it, or so they may be able to find a good deal, because who's going to raise money in IPO? If I'm building a software for an airline company, maybe I'm building a next generation kayak, who's going to invest in me? No one. It's a distressed sector. So this SPAC may be able to find out some companies at much lower valuation and bring them to IPO. Right? Again, so this actually trades at less than the initial IPO value. So let's look at, wrong animation. So they raised $575 million at a price of 10. The founders have been involved in SPAC. And the other founder, he's a seasoned executive in travel industry. Now, the interesting thing when I looked at GoAc is it's trading at less than $10. That means either market thinks that these people can do the merger. It went up on 16th. Oh, so when I put this deck, I put this deck on 14th. It was actually at $9.75. And I took some positions. Oh, but sorry, on Friday, I didn't notice that it actually went up to $12.65. Okay, so imagine, forget about Friday. Okay, my thesis of why I picked up some position and I picked up in 401k is I wanted to invest in non-risky asset. And I was looking at it. I got it at 975. And I was like, if nothing happens, I can redeem it at $10. It's 2.5%. It's better than treasury. For me to hold on to this for whatever 18 months is left, for them to find out the new acquisition company. So I thought about it. I'm like, I'm not too gung-ho about this travel sector, but 2.5%, I can redeem it at $10. If I don't like the company today, I can buy it at 975. I am looking to put some money in a safe assets. Market is already too high, so I'm like, okay, I'm buying it. So I bought it at 975, and I wanted to talk about it today. I didn't know it actually went up to 1265. So anyway, that was my thesis. Okay, my thesis was to, instead of putting it in a CD, I'd rather put it in this one, because if nothing else, I'll get back $10 by investing $9.75. That thesis no longer hold today. Sorry, guys. But there could be other ones. I don't know. I mean, I came across this and then I studied this, who are the people, and then I saw that it is trading less. I thought, okay, we'll talk about it today. Now let's talk about post-merger. IPOB. They raised $360 million at $10. We know about Chamath, already talked a lot about him. So they did a deal with Open Door at $4.8 billion. It's a pure play iBuying company, right? You buy homes on app. So Zillow, Redfin do have these options, but they are not pure play. So if you want to get into Open Door, you may want to consider IPOB. After the announcement, IPOB has already has run up high. So yeah, but the merger has not yet been completed. It's been announced. So if you are interested in Open Door, you may want to look into this one. IPOC is Clover Health, $720 million at $10 each. Same guy, they're merging with Clover Health. Now in this case, the total money, so the SPAC raised almost $720 million. They have to spend $1.2 billion, so they're getting $400 million from PIPE investors. Third one, and this again, I might be interested in this one. I have to dig deeper into some of the founders. I mean, they have experience. So they raised Flying FEAC. They raised $600 million. Founders are Harry Sloan, Jeff's team. They call themselves Eagles team. It is their sixth SPAC. It's the same team that got DraftKings onto public. So they have some experience in this industry, number one, and in the SPAC, number two. They brought DraftKings, which is, again, we all know, online gaming, and it has caught fancy of investors. Harry is also founder, investors on the board of directors of ZeniMax, owner of Game Studio. So what they did, they announced that they want to acquire Skills, which is a mobile gaming platform. Now, from a founder perspective, they got a SPAC experience. They have brought in earlier companies SPACs. They not only SPAC, they also have experience in the gaming sector. Gaming platform is going to be next hot sector. So I am building my own gaming basket. I might want to look into this one. So this one again caught my fancy. I'm putting this in my watch list. I'll do a little more study on this to see, if I want to take a positions on this one. So so from my perspective, okay, we got one more. So then we will summarize. Next one, I think someone in our Slack group had talked about it earlier. That time I had no idea about what this KCAC is. Kensington Capital Acquisition Corp. Now they have announced that they want to merge with QuantumScape. Raised $230 million. Founder is Justin Miro. Now this management team has been very active in automotive sector. They've done 70 automotive transactions, almost 300 years of combined experience. They plan to acquire QuantumScape. This is a solid state battery company backed by Volkswagen, Bill Gates, SAIC. They have some pre-orders from Volkswagen, which they will fulfill around 2025. So QuantumScape was able to raise $700 million. So 230 million coming from here, the rest will be coming from PIPE investors. Now, I forgot who had asked me on the Slack channel, hey, have you looked into this QuantumScape company? I'm like, no, I don't know. So now if you are interested in QuantumScape, and if you say, how do I get into QuantumScape? Because I think their solid state battery will revolutionize the whole EV industry. Here is an option for you to get into QuantumScape through KCAC. Or you could wait until the QuantumScape becomes public. Again, it will become public through KCAC, or you can acquire KCAC now. Okay, so I already talked about it, about the PIPE investments. Okay, so of all the SPACs that we have reviewed, KCAC is on my watch list. Let me just skip it. And this is on my watch list. Skills is on my watch list. I don't think I'll be looking into this. Probably not. And this I already got shares. So these two I'm gonna keep it on my watch list to see which one fancy me. Does the solid state is there a market for the solid state? Is it really gonna be, great? If that's the case, then I may want to take some positions. So that's all about SPAC. I hope this helps clarifying this whole dark world of SPAC. And right now, frankly, it is the hottest, I would say, venue for companies to come to public. And then suddenly people like us are thinking, I didn't hear about this company before. How come it's suddenly trading at $50? So now we know why it is trading at $50 through SPACs. All right. Any questions on SPAC? PST as a long-term investment. Yeah, I mean, PSTH, I like what, especially the way Bill Ackman has structured it. His structure is a little different to make it more attractive for investors. And again, remember, Bill Ackman is a hedge fund manager. In some cases, he's an activist investor. So if I, as a company, me as a founder of OG Pharma, I have to think twice. Do I want activist investor on my board? Right. So it is a different company than some of the others, which are, either GOAC or FEAC. Those are the executives. Those are seasoned in gaming businesses. Or QuantumScape. Those people have been part of automotive industry. Not only those companies bring up capital, but they also bring their expertise, their connections with them. So if I have faith on Bill Ackman, that would be my only reason to invest it. That he might find difficult to, get a company to bring in. In that case, you can redeem your warrants, or you can redeem your shares for $20. But so think accordingly. Yeah, he's forcing investors. He has to make it attractive because, why add an Airbnb? I may not want Bill Ackman on my board. I don't want Bill Ackman to be my bedtime partner. So if he wants to take Airbnb public, Airbnb probably would have refused because, no, I don't want hedge fund guy. So again, we can't say anything on what might happen in future. But I find this whole SPAC world is so fascinating. Only thing is we have to be really careful before we invest in SPAC. All right, so quick updates on the crypto side. Oops. This week, I felt that everyone needs a hero, and they are finding their hero in Bitcoin. Again, there's no promotion of any type of a currency. We are all here to talk about what's happening in this world, so we are informed and ready when this becomes really, really mainstream. And as you've been seeing in all these weekly updates, this week I noticed few more people, not people, few more companies getting onto Bitcoin. So let's talk about some more. Saw a paper from Fidelity on which says Bitcoin role as an alternative investment. I'm like, the narratives have changed so quickly. Bitcoin is as a drug dealer or as a darknet currency, to institution like Fidelity talking about as an alternative investment. So this is what I read. It says Bitcoin is fundamentally less exposed to prolonged economic headwinds that other assets will likely face. Combined with these multifaceted narratives, an interesting effect of persisting retail and growing institutional sentiment, it could be a useful and uncorrelated addition to an investor's portfolio kit. Like I've been talking about, it's a matter of time before the big institutional starts to sing songs about Bitcoin. Maybe the time is now. I'm seeing more and more established brands have started to talk about. Other thing, JP Morgan. So JP Morgan writes, Square's recently announced 50 million investment in Bitcoin is a strong vote of confidence for the future. And it signals the payments company see a lot of potential, which is fine. That's why Square would have invested in it. What JP Morgan says, other payment company will also likely follow into Square's footstep or risk getting shut out of a growing segment. So they do see a lot more payments company start to offering Bitcoin as as a way to invest in it. So Square has got, I would say, distinctly two different in kind of investments in Bitcoin. Is one is this $50 million investment is purely their corporate treasury. Instead of buying treasury bonds, they bought Bitcoin. Second thing is the Square Cash App. Square Cash App is growing like crazy. All the valuation that we are seeing in Square is because of the use of a Cash App. And now through Square Cash App, people can buy BTC. So again, Square buying some Bitcoins, Square Cash App users buying Bitcoins. MicroStrategy, we all know they bought $450 million of Bitcoins. The demand exceeded supply at a greater level than Q2. So again, read a paper from JP Morgan saying that institutions are getting interested in this asset class. So let's look at who else have got into it. Grayscale, they're the biggest player. Their Bitcoin Trust alone, they have their Grayscale investments is a big player in crypto assets, but only their Bitcoin Trust saw inflow of $720 million. The total crypto is 2.4 million, more than twice the amount raised between 2013 to all the way to 2019. GTBs asset under management have grown almost 150%. This is another stat that I came across. US public listed companies. We're not talking about those companies operating on dark internet. These are public listed companies. We have access to their books. They're regulated by SEC. They have 6.5 billion worth of Bitcoin on their cost basis. I mean, the amount of Bitcoins that they bought in their treasuries. Now the current value is 7 billion. And all these interest has happened in recent times. So 3% of total Bitcoin supply, which can ever be possible, is already in public companies, with the public companies. How much of the gold they hold? Probably none, if at all, or very less, if they are holding any gold. But 3% of total Bitcoin supply has been grabbed by public companies already. And I think the fun is just starting. So a quick look, I think I had the table somewhere. There we go. MicroStrategy, Galaxy Digital, Square, Voyager Digital, Riot Blockchain, Citadel. There are all these companies. In total, they got 612,000 almost 613,000 Bitcoins, which is equal to 3% of overall Bitcoins. So if what are this company, why are they getting into Bitcoin? Why not gold? I don't know. Probably they're seeing something. So next one, again, continuing the same theme of institutional investors growing interest in this alternative investment vehicle, Stone Ridge Asset Management. They have got $10 billion asset under management. They just bought another 10,000 Bitcoin in their treasury. This happened this past week. They got $115 million worth of Bitcoin for their treasury functions. Why not buy treasury bonds? Why not buy gold if we think gold is a store of value? I don't see any of these corporates buying bullions and storing it in vaults. They're instead buying 10,000 Bitcoin. Okay. Again, Stone Ridge Asset Management has been involved in this whole phenomena of blockchain in decentralized world. So they have a separate company called New York Digital Investing Group, New York DIG, which basically provide the custody management. And what New York DIG has seen is they got 115 million from Stone Ridge of Bitcoin that they are holding. It's a custody company, but they have over $1 billion that other companies have bought Bitcoin, and NYDIG is acting as a custodial holder for those companies. So out of that 10,000 or 115 million came from Stone Ridge, but there are a lot of other clients. Probably may not be public companies, maybe family houses, maybe other institutional investors, maybe private wealth management funds who have bought close to $1 billion, and NYDIG has been custodying it. And these numbers are quadrupled in 2020. So what we are seeing is in 2017, tons and tons of news, all driven by retail. And when the actual stuff starts to happen, you don't see these things in news. I don't see CNBC talking about these anymore, because now it has become a boring subject. It is when, the big funds get involved, there are no big ups and downs, things become boring, and then all this financial media and the news channels and the publications stop talking about it. They want to talk about the things that excite people, may not necessarily be profitable, but a lot of work has been happening. And now I'm seeing a lot of institutional investors giving their vote of confidence. Okay. Yeah, gold is manipulated by the Fed. So Ross says, again, so it means those CFOs who are much more, and those C-suite executives who are much more qualified to talk about investment and how they want to make use, where they want to put their company's money, than I can ever do it. They are finding some value in picking up Bitcoin. So that's all. I mean, when we started this whole crypto world, and one thing which I brought up was, once we have a custodial solutions, we will see the big money coming in. Big money has been waiting on the sidelines because no one want to take a risk of buying something which will vanish tomorrow. And that's what in 2017, people like retail investors, they got in, and many of them lost money. They got hacked and all that stuff. That stuff won't happen. I mean, I'm saying that stuff cannot happen with when you're buying $115 million or $450 million. It will just kill those companies. So they have to wait for custodial solutions. A lot of work has happened in past 2 years. Now we are at a stage where the custodial solutions have given confidence, saying, yes, we will be able to store this very, very volatile asset. And consider it as an oil. If we don't have a right way to store the oil, as an institutional investor, I wouldn't be buying, the tankers, a full ship full of oils. Where do I store it? It's so volatile. As a retail investor, I might buy a gallon. It's just a gallon, doesn't matter. But as an institutional investor, there is no right way to custody those oil tankers, to store it conveniently and safely. I won't invest in it. Same thing, at least from my perspective, I'm seeing, okay, now these last 2 years or 3 years of work that has been happening is yielding some fruit. Square, in fact, had presented a white paper. I talked about it, and this week I actually read that white paper. They gave step-by-step of how they went about buying those Bitcoins and for their own corporate treasury. And then there were links to how the custodial solution. So Square is not gone out to any other, let's say NYDIG or any other custodial solutions. They build their own. They're tech companies. They got a lot of tech engineers working. And so they build their own custodial solution of storing the Bitcoin. But there are companies, family offices, investment house, they are not tech companies. They are looking for regulated custodial solutions, which now I'm seeing are coming into picture. Fidelity is moved, already licensed. They're already doing it. NYDIG, I heard about it last week. All right. The other one is news I saw was, again, this is blockchain. Now, Canadian Pacific is jumping into logistics blockchain to revamp its operations. Now, I don't know who is behind this, which tech company is behind this. It was block. So this is a Trade Lens is helping them out. And this was jointly founded by IBM and Maersk. Again, the idea is, the reason I wanted to share this is, it's not only a new age tech companies. Canadian Pacific, railroad for all the sectors, old economy. Now they realize that using the blockchain, they can save a lot of cost and make their processes and operations much smoother. So now they jumps on to this logistics blockchain initiative. All right, so these are some of the world news. Especially my theme was that growing institutional investors' interest in some of these crypto assets. So take your decision accordingly. Again, I'm not promoting anything. You figure out what's good for you. And do you think that, some of these could become a standard, like we buy GLD, TLT could be BTC. All right, let's talk about the next one. Any questions till now? Anyone did anything on the crypto world last week? Or still staying away or just watching? Or this is the world that you want to, don't want to deal with it? I'm still audible? Oh, okay. RS is highly interested in, but haven't purchased yet. Yeah, I mean, there is, again, this is any other type of investment. Do what you feel you're comfortable with. It started with, from a barter exchange, we moved on to the currency exchange, then we moved on to exchanging bits and bytes. And now maybe exchanging crypto assets, who knows? So Sachin says, have taken baby step, starter position, LTC, Ethereum Classic. Okay. So Sachin, yeah, do your homework in terms of what's the thesis behind LTC? What's the thesis behind Ethereum Classic? Right? So I am not investing in from a trading perspective that, okay, I see a spike in it and I want to sell it off because of all the whole tax issues are complicated in this one. So my main philosophy is it going to grow in usage? If yes, then the value might grow, and then I want to be in. Ramesh can't handle the volatility. So let's talk about volatility. I didn't even see where the crypto market was last week. It's less volatile than some of the other things that we are seeing. Bitcoin last 7 days, 0.08%. Is better than QQQ. Ethereum 0.15%. Tether is anyway not supposed to change. XRP is a little volatile. I mean, some of the bigger ones, Ramesh, I don't see them as volatile as they used to be earlier in 2017. Nowadays, I think, and again, I think this is one area, if more and more institutional investors will get in, they will get in only if the stock doesn't stay as volatile as it used to be. No one would want to, hold assets which move up 20% up or down on a daily basis. Maybe some retail investors will love it, but I don't think any institutional investors would be able to stomach that big volatility. So it all depends on which assets you want to pick. In this world, sure, there are some assets which are 20%, 30% per day. Forget per week, per day. There could be. Oh, we saw 8%. Let me just, or I haven't, there we go. 40% up. In 7 days, it's 60, almost 50% up. Yeah, so be careful in terms of what and build your thesis. All right, so let's continue on our next section. Is this probably going to be penultimate section? Continuing our study on the decentralized finance, we talked about blockchain, how it works, smart contracts. We talked about the adoption, and this is where I mentioned if I see more and more custodial solution built in, and there are being built in, we'll see a lot more institutional investors interest in this. And in 4 weeks, we have seen that. Then we moved on to DeFi. We talked about what is DeFi, what are liquidity pools, automated market making. And today's session, I want to talk about from mining of currencies, we're becoming farming of cryptocurrencies. So let's jump on to from mining to farming. All right, let's, we talked about last time. I had a quick recap. So let me just quickly recap what we talked about in the last session. Okay, so we talked about liquidity pools, why all those liquidity pools have become hot. You know, how you and I, as a retail investors holding assets, can actually provide a liquidity in exchanges through a process called automated market making, and we can earn some yield on those assets. Those assets are lying in my Coinbase account. Coinbase doesn't give me anything. Why not put those assets to work? And that's where you could stake, you could put your assets in a liquidity mining pool or in liquidity pool, and you can earn a portion of a fee that the exchange generates. NASDAQ generates a lot of fee, right? Even if I have a few million shares of OG Pharma in my E-Trade account, I can't move it to NASDAQ and say, you know, I provide liquidity to you on OG Pharma and just give me some portion of the fee, pro rata. I can't do that. In crypto world, I can. And those, what are the liquidity pools? Right, so we talked about Uniswap, SushiSwap, Co, Balancer, and then we talked about how the liquidity pools also moved from not just giving you the as an investor or as a liquidity provider, apart from giving you a portion of the trade, portion of the exchange fee, they will also giving you a share, which is what's called governance tokens. And then we saw a lot more companies starting to do it, which led to a phenomenon called yield farming. That's the topic for today. Come up. All right, so we're going to talk about yield farming. We all familiar with the yield? Just trying to extract some yield through my investment. So now the yield farming is a new way to earn rewards with cryptocurrency holdings using liquidity protocols, permissionless liquidity protocols. We already have seen this. This is what the liquidity pools is. This is basically when you stake your assets onto liquidity pools, you earn some reward pro rata based on how much liquidity you are providing to that pool. That's basically yield farming. It allows anyone to earn passive income using the decentralized ecosystem money Legos. Right? So all these liquidity pools are built on Ethereum and on these the exchanges, on decentralized exchanges. And if I am providing liquidity by putting my shares or my coins in that pool, I get paid. So a lot of boom we saw since August. And again, this world moves at much faster pace. So this became more and more popular in August, just 2 months before. Prior to that, I never heard of yield farming, in June, July. A sudden interest came in yield farming because the launch of comp token is a governance token of compound finance ecosystem. You can ignore comp or compound finance. The, the key takeaway is a governance token that we talked about in a previous session. When you are staking your coin, you are also getting a token from that exchange or from the finance ecosystem, which is a governance token. Now, the first one to start was compound. Now nobody talks much about compound. Lot new projects have come in. Since the launch, lot more DeFi projects, SushiSwap, Uniswap, Curve, Balancer, and whatnot. Now, it's equivalent to say, there are, let's say, 20 different exchanges, 50 exchanges have come in. All of them are giving a lot of innovative schemes to attract liquidity. Okay, forget about exchanges. I'll take maybe an example with which we all are familiar with. Banks, or good old banks. Where do the banks get the liquidity from? Where do it? I mean, that's a question. So banks get liquidity because we put our money into it. We deposit our money into Bank of America. I have my savings account. You have your account in Chase. Might have a CDs in Chase. So we provide liquidity to banks, and many other investors, they provide liquidity to banks, and we do get something in return. We get whatever 0.01%, 0.05%. More and more banks started to come up. Now we have hundreds of banks providing us with the different options on how we can earn yield on the money that we have staked with those banks. That's exactly, the closest analogy of what we are seeing in the crypto world. If I have money, I have options on where to invest in. Should I invest it in Bank of America, JPM, Chase Bank, Synchrony, Capital One? There are many DeFi projects have come up with innovative schemes. Like banks come up with their own innovative schemes, right? You bring in so many assets, you get $500 free. You'll get a card of $500, cash card of $500. If it is more than $25,000 in a CD, you get extra 0.25% high yield. Similarly, on the DeFi side, same thing is happening. So there are multiple farms. There are hundreds of banks. Which one to pick? There are many liquidity pools offering these governance tokens and the trading fee, portion of automated market making fee. Banks, I wish if Bank of America would also offer me a share, saying, because you have invested in our bank, not only you get a fee, but also you get to vote on the workings of bank. You become a shareholder, you can vote on what we as a bank would want to do. I hope those days will come. Well, let's move on here, but those days are in crypto world. So which one to invest in? How to find out? How to track? If I have invested in 10, 15, how do I know what to do? So this is like a Robinhood plus Wealthfront. I want to talk about what made this whole yield farming so popular, and it suddenly became, the top news in this world. is a deadly combination of Robinhood and Wealthfront into one company, which is called Yearn Finance. Yearn Finance kind of became robo-advisor for yield farming, right? There are multiple liquidity pools available. Which one should I pick? Which one will give me the best yield? Which one has a better APY? Everyone have their own terms and conditions on how they will distribute the profits or the tokens. So what Yearn Finance did, they became a gateway to all the rest of the world. And they have a great user interface. So I don't have to deal with 10, 15 different liquidity pools and learn about each one of them. I just go to Yearn Finance. So what is Yearn Finance? It's a robo-investor platform. User can deposit any of the several stable coins. We talked about stable coins are the ones that don't change in value. Most of the stable coins have a value of US dollar. So Yearn will look for the DeFi platforms on which those coins can earn the highest yield across all the liquidity pools. It's like bankrate.com. Now their intuitive user interface hides all the complexities underneath it. Now, once you get a very intuitive way to invest in it, like Robinhood. Share trading existed before Robinhood came into picture. Why suddenly a lot more investors jumped on to share trading? It's so easy to trade using Robinhood. Yearn Finance did the same thing on the crypto world. It made it so easy to mine the yield from liquidity pools. It's a portal. It's a gateway to various DeFi products. With billions of dollars are staked in DeFi projects. When I say staked, means those coins are staked to provide those liquidity pools. The front door itself end up being very valuable. Now, Yearn Finance itself is not a decentralized exchange. So there are 1, 2, 3, 50 exchanges, which each one have their own liquidity mining pools with their own distribution logic. Yearn Finance became the front door towards the wealth of all the distributed those projects. So the door itself could end up being very valuable. One door that we all know, the door to the knowledge, is Google. That's how they started with. Again, I'm not comparing that Yearn Finance will become Google, but it's easy to take analogy. Google did not have any content of their own. All they did was it gave much better interface and a good results to the world of content owned by someone else. That's exactly what Yearn Finance is doing. So their goal is to create the simple intuitive interface for all the DeFi. So no wonder, let's bring up that chart we had seen earlier. I closed it. No wonder everyone was talking about Yearn Finance. Come on. And that's where the Yearn Finance coin actually was trading somewhere $40,000 some part of a time. Because the gateway itself became, because they provides a intuitive interface. It suddenly exploded in popularity. Yeah, I didn't hear of any of this. It's started exploding in August and all the way to 40K. And now it's back down to 10K. So the Robin Hood of crypto world, Yearn. So what else does Yearn Finance have? Now, not only it's a gateway to the DeFi or to the yield farming, it has its products of its own. It got its own governance token, YFI, which will basically, if I hold all the YFI, it means I will decide how, if a new functionality needs to be added, I have much more say on that. It's like a share in YFI. So when Yearn Finance came into picture and everyone was using Yearn Finance to manage the yield, there was a mad rush for YFI tokens also, saying if this becomes the gateway to this financial world, oh my God, I want to get into it. There are only 30,000 YFI, and that's a scarcity, which caused this whole big run. And again, you get a dividends if you use YFI. So only way to get YFI is to buy. You can't mine it anymore. Anyway, they have more products. They got a vault in which you can do a lot more complex strategy. Again, this whole this liquidity pool is not to extract more and more yield. It's equivalent. If I want to generate more alpha, a little more complex strategy. So Yearn Finance is offering more products. They are offering products in which if you trade back and forth among, for example, just 2 shares, you don't have to pay any trading fee, which is a gas fee. So they are integrating with another, let's say, Curve, which is a decentralized exchange, saying, if I am trading into these 2 securities, you can avoid all the fees. So they got multiple products. They also got an insurance available, etc. So right now, this whole yield farming, Yearn Finance is the most exciting project in DeFi space. But then, again, it could vanish. We have seen many projects coming in and going. Some of them will stay, some of them may not. But it's interesting to keep an eye and to see if it survives for another year or 2, or it might change, its shape or form before we try to think, do I want to invest in this or not? So that's all about yield farming I wanted to talk about. There is one more session left in this. And again, this became more popular in September. I was earlier September. Yeah. I had not heard of this last thing that we're going to talk about in next session, but now I have to add it because this world is changing so fast. That's all about in the crypto one. One more session to go, and then we will be done with this. But I don't know. Some more thing may pop up in November. So that's all about Yearn Finance. If you really want to do liquidity pool mining, maybe go through Yearn. It will take out a lot complexities. You don't have to deal with a lot more complexities of dealing with multiple exchanges, finding out which one can provide you better yield, etc. All right, last section for today is looking at our trades. And let's look into the trade section. So what I did is, I was thinking, we've been talking a lot of trades in multiple sessions. So I put all of them together in a sheet and say, let's see how we have done. I mean, does this reviewing these trades even helpful? So we want to talk about how those trades have been doing. And if you know me, for me, if I can't measure, then I don't know what am I doing. So I started to put all this in here so we can measure it and we can track how those have been doing. Good, bad, ugly, you are the judge. So the trades that I closed this week, let's look at those. So Eventbrite, we talked about it. This basically got expired. This was 17 and a half. Okay, let me just pull that up. Okay, these are the closed ones. So this was 17 and a half short call. Eventbrite was at around $10. So this expired worthless, helped us in reducing the cost basis of long holdings. So 3 silver trades, and those who have been in this session for some time know silver have been bothering me for quite some time because of the moves that it had made, but I'm not given up yet on it. So we had a 2022 inverted triangle. I rolled it out from October to November. So it means the October trade has been closed. So this is the October closure trade. I also 22 put October trade has been closed. That's why this is the October closure trade. And I also had 24 put that we closed for, again, rolled it out to November because silver is still below 24. So took a temporary loss of $124, but I got additional credit of 75 cents to roll it to November. So I'm still in silver. We will see in open trades. Other trades that we closed was Lululemon. We are out of our short put spread. We opened this on 23rd. Stock was at 325. And then stock was 350. And this trade automatically hit our profit target. We were able to exit it after 20 days. And decent profit of $615 for $5,000. So which is almost 12% return on investment for 20 days. Not bad. I'll do it any time of the day. Other one was Docusign. Again, put spread that we had opened on 23rd, closed on 12th. We were in this for 19 days. When we opened, the stock was trading at 219. Stock helped us. It went up to 232. We were out of this trade. Again, almost 13% return on capital for 19 days. So net, last week, we either closed or completely closed 2 trades, 3 trades we rolled out. But if I'm looking at a P&L, I think last week, how was it? Okay, we netted 2K. We did one contract. Again, silver, I'll have to see eventually when I get out of the position completely, what the position would be. But for now, this is our trade closure for the past week. Opening the new ones, or not the new ones, but all the open trades, PagerDuty. Okay, are you still, is this, let me see, do I? Okay, probably this is better. PagerDuty is still holding. It was a November expiration and we still have time. I'm still holding it. Stock has actually gone up, so it is in the money, but I still have time. Again, this is a covered call. So anything I do here is I'm getting a little more greedy now, but I will see. Roku, I'm still holding it. We opened it on 1st of October. Overall premium is decent amount, almost $1,500 premium. Let's look at Roku, where the stock is. Yeah, still making decent money. I want to extract a little more out of it, maybe almost $1,000 before I close it. So, and if it falls down, I'll acquire Roku at 165. If it goes up, I'll make $1,000. So I'll hold on to this for a little longer. This is already, I mean, my 50% target is already hit, but I think Roku, I will still hold it for a little longer. And I mean, the capital blocked is what, $1,600 only for now. So it'll be good. It will be a decent return on investment. JPM, still holding it. trade number 9th or 10th, I can't even recall. It's been the wonderful, wonderful vehicle for us. This is the one which I might close the coming week. It's made decent amount of profit. And if the volatility goes a little low, it probably would hit $550 of a profit. And I might take this off next week. But till now, it's been a decent trade. $2,000 capital invested in this. So just holding it. CGC is a short put. I continue to stay bullish on cannabis industry. I'm still holding it. The other short put on CGC is 17.5, still holding it. Again, for 20th November, we still have a lot of time. So waiting for the theta decay to come out. I mean, we opened these positions just, on 7th. It's not that has been really been there for a long time. XLU, we had Iron Fly, again, still holding it. It started to make some money, but nowhere near 30% of profit targets. New trades. Lululemon. I talked about it, that I will get back into this. Lulu has been good for us. So I'm back into Lululemon. Put spread, limited risk. Most of the time now, for any high value taker, I am doing spreads. I'm not doing naked any new trades because I don't know what might happen in election. That's one way I want to make sure that if bottom falls out of market, I don't have unlimited exposure. So Lulu, we did a put spread, sold 280 short put, 330 short put, bought 280 short put. Maximum risk, if bottom falls out of it, is $5,000, nothing more than that. And my account can handle that risk. So still not profitable, we'll hold it. And these are the silver trades that I had rolled out from October. So we closed out our October trades, rolled them out to November. So we'll still wait and watch on silver. Now I have only the November positions in silver, and then I have 300 shares, long shares of silver. This will be interesting one. I think eventually I might have to just close all the silver positions for a loss, but we'll see. I'll try to fight it as much as I can, and try to recover any lost money in silver. But I may have to close it for a loss. So that's fine. There are some losers, there are some winners always. So that's all about what from the trades perspective. And if I look at all the trades that we have discussed till now, and if for nothing else, if you just have been awake and followed those trades, probably this is the value. I put a number to value of these sessions is just looking at overall P&L, it is $9,000. So if you were not awake and not paying attention, then it's all up to you, not my fault. So, and I think this is a good look. I mean, we should track it. So I started tracking all the trades that we discuss, and we will update it every week whenever we bring in any new trade. And the last one, what's on my watching? NEO. We talked about earlier. It's been on the rise. JP Morgan became bullish, raised their price target from 14 to 40. That's what caused it jump from 20 to 29, almost 29. So I have positions in it, watching it. Jumia, I have positions in it, watching it, holding it. Nanox, I continue to keep my eye on it. Again, I have positions on Nanox. Baba, I have to wait until that Ant Financial IPO is listed. It's been dragging for a few weeks. They haven't got sign off from Hong Kong authorities on their paperwork yet. So I will continue to watch it. It's going to be interesting play. Ant Financial's Alipay, they processed $1.7 trillion worth of transactions last year. When we talk about these companies in China, it's only about billions and trillions. There's no millions in those vocabularies, right? So we think Amazon is big until we start looking at what Alibaba has done. Just comparatively, number in 2019 on Cyber Monday, including all the retailers on Cyber Monday, Amazon, Best Buy, all the retailers. I think US, what we did, I don't recall the exact numbers, maybe around $7, $8, $9 billion. Alibaba on the singles day would do $25 billion worth of transactions. So when we talk about these, some of these Chinese companies, we just have to add a few more zeros behind it. GDXJ has been sideways. I have a position on GDXJ, and gold. So I'm continuing to watch it. I just need a little more theta decay around it. Mercado Libre has been on a tear. It just hit its all-time high on Friday. And I've been a long, happy shareholder of Mercado Libre. I will continue to stay in this. Oh, that's my revenge trade for missing out on Amazon. When Amazon was trading at $100, $50, because I wasn't even aware of Amazon by then. Continue to stay in JP Morgan. Wonderful, sideways, good trading vehicle. Bank of America, same thing. So these are the big ones on my radar for next week.